Contents of this presentation are not intended as a recommendation to buy or sell any security and are for educational purposes only. Okay, here's the whole market. The epicenter of the crash, I analyzed the whole sell-off, was China. It's very obviously something happened in China. The Chinese market really tanked, and it spread throughout the world. And we'll see the chart later on. Now, we have this canary in the coal mine indicator that David mentioned. It's the junk bonds, basically. And it's gasping for breath right now. That canary is in big trouble. So, and in case you don't know what a canary in a coal miners used to take a little canary down into the mines with them to see if there was poisonous gas. Now, the canary, being very tiny, would keel over very quickly before people died. So the coal miners, if they saw the canary breathing badly or falling over, they'd run out of the mine right away before they died. So we have this one indicator that tells you whether the market's in trouble. That's very reliable. And it's in trouble right now. So interest rates are going up globally, and that's a negative for stocks. It's happening everywhere. There's maybe one country, and that's Japan, where it's not happening so much. And so that's the best bond market in the world was Japan. All the others are negative. Bonds actually went down during the bad week and the week after. So we analyzed 2 weeks. Japan was the only country that was safe to hold bonds. The best currencies, there's a lot of good currencies. The yen was the best by far. Swiss francs were very good. The euro was okay. The British pound was okay. And the Brazilian real actually, is how you pronounce it, was also okay. So the dollar was not great, but most currencies were good. And the yen and Swiss franc were really good, really good. So best commodities were gold, platinum, palladium, base metals. Base metals are things you build stuff with. Copper was also in the group. Copper's a base metal, so is tin and nickel and zinc and lead. So they're industrial metals. They did well, copper did well, and strangely, PBW, which is an alternative energy ETF, did well. Now this has been going up for quite a while, and it should not. The Trump administration is totally hostile to alternative energy, and somehow this is still rallying. So, and actually all precious metals, and that includes silver, also did well, but it's trading under its 65-week moving average, which means it's bearish. So I cut out anything that was trading under the 65-week. But you were safe in every precious metal. Yeah, that's gold, silver, platinum, and palladium. So, and then the other base metals, basically metals. Any type of metal was okay to own. Now, the best stock markets, South Africa actually went up. Russia, which is a commodity-based market. Russia went up, which is a commodity-based market. Thailand and Indonesia in Asia, and these are both sort of puzzling. Brazil, which is a commodity-based market. Brazil, Peru, Chile, and Colombia. Basically, South America, you were in good shape. Africa in general was in good shape. There's an African ETF, AFK, and that went up the second week. So basically, these sort of edges of the world areas did well. And it was and we, as we said last time, in case you were not at the January meeting, the epicenter of the center of the bubble, world stock market bubble, is the Dow. And this is unusual. In 2000, it was the NASDAQ and tech stocks. The Dow tends not to be the center of a bubble, but this time it is. So and it's just by coincidence, David analyzes the Dow. He started doing this years ago. It's extremely appropriate right now, because that is where the center of the problems are. So these things did relatively well, or are doing relatively well. So it's the US stocks that are not doing well. European stocks didn't do well. You don't see any European stock on this issue. So the developed world, Japan did not do well in the stocks. It did in the currency, but not in stocks. So it's basically South America and the edge of Asia and South Africa and Russia. Russia is commodity-based. A lot of the things are commodity-based. So commodities are the only asset not in a bubble. So if you want to buy something, yeah, they can go down, but they don't have much room to go down as like stocks or bonds. Now, here's the Dow. There's all these charts. The down week has this red circle around it. So you want to see what happened there and what happened the next week. The next black bar is the following week. So we pointed out that the Dow was in this is like bubble-like behavior. This number should never go over 80. It's been there for weeks and weeks. And what you have here, you still have not, what disturbs me, these are support levels, this blue and red. And if it had hit this blue level and bounced off, that could be an indication of some bottom was formed. But it didn't hit that support level. So it like bounced up without hitting a support level, so that's not a plus. And then there's an inside week, which is considered negative by most stock traders. That means the trading second week was totally inside the previous week. So you see a lot of that. Now this did bounce off the 50. That's a logical support move. Now when this blue line falls below the red line, it's a sell signal. So this happened on the MACD for the Dow and lots of other indicators. Now when this red line crosses above the blue line, they actually started moving together. That's bad news. And when the black line crosses, it's a major sell signal. So there's market damage. There's damage here, and there's no clear level of like support to support a bounce. And if you also want to bounce, you would like to see some sideways movement, maybe for a few weeks, right around that low level before you start moving up. So no base has been formed for a bounce either. So things are bad, but we really haven't reached a level of resolution to support an upward. So we might still hit new highs, as David says, but there's nothing supporting that move. It's like air, it's driving on air. So that's not good. So we look at the S&P. It's not only got to the blue level line, which is a 200-day moving average, but it fell below that. That's also bad. That is usually a hint that later on, it's going to go to the red line, the next lower level. So that's not good either. Now we also see, it's hard to tell, there's a little sell signal that happened here too. And this red line moved above the blue line, which is a negative. So there's damage here, not total disaster, but there's damage. And NASDAQ, we see also is floating just above that blue line. So that's not good either. We wanted to hit the blue line. And then the second week, though, the high went a tinge higher. So that's sort of positive. Now you see there is a slight sell signal here. It's not obvious. And you see the red line moved above the blue line, which is negative there too. So the Russell has been weaker than and small caps than the other indices. Now this broke that blue line, but it didn't hit the red line, which is what you want. So nothing has resolution. And you have a very obvious blatant sell signal right here. And this red line moved very decisively above the blue line, which is very negative. So, as Alvarine said, we're having a situation where fewer and fewer big cap stocks are holding up the market. That's extremely negative. And as market peaks happen, fewer and fewer stocks go up and are holding up the whole rally. And Alvarine pointed this out, that this is happening right now. This is very negative. It's an indication of the end. And other very negative thing is, well, the end of your money unless you take it out of the market. So, like, they all owe you, Alvarine. Remember this. Drinks for Alvarine. Any number. So, the other thing that's happening, I want you to watch this. The market is up in the morning, and then, like, the other day, yesterday, not today, it was up several hundred points, then it closes down 150 points. The professionals sell at the end of the day. If the market's up in the beginning and is down at the end, that's a bear market behavior. It's very negative. So we're seeing lots of negative things happen. All of these are warnings that you better get your money out of the market. Now let's go overseas. The FTSE is the British index. Notice this fell below that red line. Going below the red line is bearish. So this fell decisively below the red line and could not get above it the next week. So this is turning bearish. And this is below 50 here, it didn't like bounce off of it, so that's bearish. This is a blatant huge sell signal right here. And this actually, the red line above the blue line with the black line crossing is a sell signal. So this is British stocks. Sell, 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 sell. All negative. Now it could get more negative, which we'll probably go see in the next month or two. Now here's the German index, also below that red line. Now the second week it managed to inch just above that red line. So this is negative, but not quite as bad as the British market. But this below 50 is bad news. This is a blatant sell signal. The red line is above the blue. Now the black line is riding along it, so it's like trying to give a sell signal, but can't quite decide. So this is not good looking. I mean, it's not as totally horrible as the British market. Here's the Nikkei. This is the Japanese market. Notice it fell below this, the top yellow line. It did hit this blue line, which was a good thing. And then, but the next week it went below it. So it looked like it was good, then it blew everything the next week. So that's negative too. And this fell below 50, but it's sitting on it, so it's a little indecisive. This is a blatant sell signal. This is a half sell signal. We need this black line to cross the red line at some point. So this is turning negative. Now let's look at emerging markets, which look much better. We just saw all the major markets of the world. They don't, and the European and the Japanese markets don't look good. So they look worse than the US. Now here's the Bovespa, this is Brazil. Notice we're totally above that yellow line, that's bullish. It didn't even hit the yellow line on the sell-off. So, I mean, there's no real sell-off in Brazil. And then it went right back to the top the next week. It didn't get higher. And this is trading above 50. This is a buy signal because the blue line's above the red. This is a buy signal too because the blue line's above the red and the black is moving up. So Brazil looks like it's rallying and is very bullish. Doesn't look anything like the European markets or the US market. Shanghai is China. This was the disaster. This is really bad news. This was floating above that yellow golden line, which is bullish. And in 1 week, it went from bullish to it went way below this red line, which is bearish, all instantly. So there was like nothing holding this up. This is really bad news. And then the next week, it couldn't even get back to this red line. So this is very bearish. And this fell below 50, which is bearish. This is a sell signal, which is bearish. This is an absolute sell signal, which is bearish. So China just like collapsed like that.
Got more to go.
And that's, well, according to yours, you've said this for a year and a half or 2 years already. Yes, and this spread throughout the world. So the problem started in China. It's very obvious because this was the worst hit market. And they spread to the US, they spread to Europe. Interestingly, they didn't spread to Indonesia or Thailand, which are not too far away. Yes.
Did you come across any reason why it started in China?
Oh yeah, there was some news at the time. I don't remember. Something was going on.
I mean, did people start to sell before the holidays because they knew they were going to be off the market?
Well, that's pretty drastic selling.
Yeah.
This is like from 3,500 to below 3,100, so it's like 12-13% in 1 week. And
oh yeah.
Probably only part of that week was the selling.
Oh, yeah.
So that's a drastic. So this is China's really negative. And it never has resolved this bubble from 2006. So, and Japan was in a bubble in the 70s and 80s, or they would say at the end of the 80s. And it peaked in 1989. I keep pointing this out. It is nowhere near that 89 peak in 2018. This is 28 years later. It's still way down. So the idea you can hold for the long term isn't, well, the long term base could be very, very, very long, like your whole lifetime. I mean, if you started work and bought, say at 22, you graduated college, you bought Japanese stocks in 1989, 28 years later, you're 50, you're nowhere near the money, you'll have maybe half the money you had then, and you're 50, going to retire, well, you can retire at 55 in Japan. So you can retire and still have massive losses after your entire career. So here is the Sensex is India. This is a stronger market. It's been very strong for years. It only broke below this yellow line. It sort of got back to the yellow line, so it didn't know what's that it may be okay. This stayed above 50, which is good. Did not hit this 50 thing. There is a sell signal here, and this red line is trying to move above this blue line. If the black line crosses it, that's a blatant sell signal. So you need to watch this the next 4 to 8 weeks. This could turn into selling. And you can't see it in this chart, but there is a gap in this chart from several years ago, way, way down. That gap has to be filled one day. And it may be, that day may be coming in the next year or two. Here's Russia. Now, Russia has been down for years, but it's formed a bullish pattern here. It's hit this red line with a tinge below it, so it was like, oh, that doesn't look so good. But then the next week it went back above the yellow line, which is back into bullish territory. This did not fall below 50. The blue line actually stayed above the red line. There's no crossing. It's hard to tell if you're in the bag. And this red line, it looks bad, but then it's actually falling down. Looks like blue line's going to cross back again. So Russia actually looks, so far looks okay. Now Russia is relatively cheap and it's commodity based. So, and especially oil based more than oil. But it produces every commodity. So it may be safer. Usually it's one of the big disasters in a sell-off. But in this run, it may be safer than in previous sell-offs. In fact, a lot of things are changing. Bonds may not be as good as they used to be. The dollar may not be as good as it used to be. And commodity countries may be much better than they used to be. So we will find out. So those are the BRICS. Here's the dollar. The dollar is just a mess. And it has been. This is 1 year. These are 1 year charts. So it started its highest at the beginning of a year ago. Now this red line above the blue line above the yellow line is a bearish pattern. So this is caught in a bearish pattern for a long time. Now this did go up during the big sell-off week, and then the next week it went lower. So the strength was very ephemeral. It just disappeared like that. So even if the dollar does go up in something, it's going to lose that rally very quickly if there's like a crash. So for that week it'll be good. A week or two later it's not going to be good. Now, David may have said this red line is above the blue line and the black line is very bearish. This is bearish because it's below 0. This is below 50. This is bearish. That blue line's below the red line. So the whole chart's bearish. However, but bearish for a long time. This RSI is gaining strength, which means that the dollar may be reversing for a while. Now, if there was a crash, that would actually make it reverse. So this may be another indication that there was going to be some big drop or some crash. And the euro has the opposite looking chart, as it usually does. You know, this is losing strength, and the euro is very, very high. And so it looks like it wants to go down, and then the dollar wants to go up. Now, it might be going sideways for a while first. Now, here's the euro. If you have this opposite thing, this is falling down as the price is going up. Now, notice the euro went down that week, and then the high was higher than the previous week. Just the opposite of the dollar. And that this whole pattern is very bullish. The whole chart's extremely bullish. So, but you're seeing this weakening right here saying, ooh, there might be a change of trend in like a month or two, or like in March or April when the market crashes, for instance. Write that down somewhere. Now, here's the yen. Look at this. Now, the yen is a crappy currency. Japan's a mess. But look at this. This actually was higher on that week. And then the next week, it went way higher. So this was the best currency to own in the world. The dollar was not the currency to own. And during the 2008-2009 debacle, or huge bear market, the yen actually did very well, like the dollar did. Not quite as good as the dollar, but it was the other currency to own. So this time it's done really well when the dollar just did nothing. So people still are trusting the yen in this crisis. They were not trusting the dollar. So this is eyebrow-raising information. Now notice this is above 50, which is bullish. This is above 0, which is bullish. The blue line's above the red line. This is a buy signal because the blue line's above the red line, the black line's going up. So this is a very bullish chart. So you want to have a currency, you'd be better off having the yen than the dollar in the next crisis. And here's the Swiss franc. This also looks good. The Swiss franc actually is a good currency, unlike the yen. Now this yellow line crossing is bullish. It went down during the bad week, but the next week the high was higher than not only that week, but the previous 2 weeks. And this looks sort of like, are there any IBD people here? This looks sort of like a cup with a handle, right? With this is like a high handle, this is the cup formation. So I like to point this out for IBD. Because usually it works, frequently it works. Even it's not supposed to, like, this is like a currency. There's no earnings or anything. But the same type of patterns work. So, and this is quite bullish. This is above 50, this is above 0. This is a buy signal, this is a buy signal. So, and the Swiss franc is one currency you'd like to own. The dollar you don't want in the long term, the Swiss franc you'd like to have. And here's the British pound. Even this, it's not like the Swiss francs, so don't get so excited. But even this is a bullish looking chart. This is above 50, this is above 0. This is a buy signal. We went down that week. We didn't even hit that yellow line. You know, being above the yellow line is very bullish. And then the next week, we sort of went a tinge higher. So I wouldn't buy this over the Swiss franc, but this is stronger than the dollar, a lot stronger. Get those pounds back, David. You should never have given them up. Put all his money in dollars. He's foolish, very foolish. So the Canadian dollar, this is like, this is like, this was on a buy signal, sort of like fell apart. This is above 0, which is good. And that blue line is with the red line. This is clinging to 50. This went below the yellow line. Almost hit the blue line, but it didn't. And then went a little lower the next week from the looks of it. So, and this tends to follow the dollar in crises, so I wouldn't run and buy the Canadian dollar. And the Australian dollar, which we like in general. Now, it was bullish. This is like sort of, it's losing its rally. This is bullish. This is okay because it's above 50. This yellow line crossing is good. This went down. It went down a lot the previous week, which is interesting. But when it went up the next week, it went back above this yellow line, so that's a good sign. I mean, it's not as good as the Swiss franc or the Japanese yen. Nothing matches them. So write that down. Now this is the Brazilian currency. This did not fall to that red line. It did the next week. This is an outside week, which is very unusual pattern. I haven't seen it much anywhere. And then it went back above that yellow line, so back into bullish territory. And this was a buy signal, and it stuck. It didn't fall apart. This is a buy signal. It also didn't fall apart. This stayed above 50. So this is like an okay currency. It's not a great currency. Now, in 2009, after the market collapsed, the two best performing currencies in the world were the Australian dollar and the Brazilian real. Real, it's pronounced real correctly. So Brazil was actually number 1 by like a hair's breadth. And people were like shocked, like how could the Brazilian currency be the best performer? So don't count this out as like an unimportant currency. Okay, oil, my oil charts are totally different from David's. So oil is very bullish. I mean, it was riding way above this yellow line. It needed to come down to the yellow line. Now also, its weakest period of the entire year is usually the first 2 weeks of February, where this like mini crash took place. So it like was magnified. Now, it still didn't get anywhere near these lines, and the next week it went back up the yellow line, so it's sitting there. Now this blue line is trying to cross the red line, which is a long-term buy signal. So, and that will happen because the price, unless there's some big disaster the next week or two, because the price is way above both lines. So, and this is above 50. This blue line did not go below this red line, and this is a buy signal right here, and it's still on a buy signal. So oil is still in okay shape. Now, if there's a big crash, I agree with David, it has to go down, but that doesn't mean it won't go up right away, right afterwards. It's in much better shape than the stock market. Natural gas is a total disaster. Don't even buy it. Don't even think about it. It was already really bearish. This is bearish. This is bearish. This is bearish. This is bearish. It was trying to turn bullish all of a sudden because of a really cold winter. But like, just stay away from it. It has nothing to do with this drop. It's just bad news always. And here's alternative energy, which was doing really, really well for a long time, which makes no sense at all, because the Trump administration keeps taking money out of programs for it. So this just fell apart very quick. It almost hit this red line, but didn't. And then it rallied. It was higher the second week and rallied right up to that yellow line. Now it needs to go above that yellow line. And if it stays below it, then trouble is going to come in. And this is a very obvious sell signal. This almost made a sell signal. This is negative. Fell below 50, but went back above it. If it goes back below 50, it's negative too. So this is something you would not buy. And if you owned it, you should be worrying about owning it. So this is uranium. CA means Canada. This trades in Canada. Uranium's been a disaster for years also. And this like fell below, the charts are all messed up. It fell below the lowest line. It went a little higher the next week though, which was sort of bullish. And then it managed to get back to 50. This is a sell signal though. And this is like almost a sell signal, but the blue line stayed above the red line, which is positive. So uranium is trying to hold on, but it's the whole bigger chart's a real mess. So I wouldn't run and buy uranium right now. Uranium stocks also are a mess. So there's also negativity in this chart. So let's look at precious metals. Here's gold. Gold is trying to have a massive breakout, and one day it will. It needs to go above that 130, 1300 and something, and then it might go back to toward 2000. Now it had a big drop on that week, which doesn't make sense. It should not have gone down. But the next week it went higher and higher than even the previous week. Now it stayed above that yellow line the whole time though, so that's bullish. You know, as long as it stays above that yellow line, it's fine. And the pattern is bullish, this is bullish, this is bullish, and this is a buy signal. It's sort of a weak one. The black line needs to go up. So gold is actually in okay shape, and this line I drew just for this man over here, it looks, once again, it looks like what?
A cup in hand.
A cup in hand, a cup with a high handle, right? Yeah, and where did we see that before? Well, we just saw something with a cup and high handle.
The currency.
Which currency?
Swiss franc.
Swiss franc, okay. Swiss franc and gold actually tend to be linked, so very interesting. I actually wrote an article seeking out logo. The Australian dollar is linked to gold, but the Swiss franc is also linked to gold. So that's a confirmation. That looks, you know, if they're both trading in similar ways, it's a good sign. Or a bad sign. If they're going down, it's not good. The gold miners, however, are in bad shape, and they need to be in good shape for gold to have a sustainable run. This just totally fell apart. Now the next week it got a little higher, believe it or not, but that was a big drop. So if the miners don't do well, you can't expect gold to continue to do well. So this is a bad sign. Now, but this is around 50, which is neutral. This is around 0, which is neutral. And the red line above the blue line is not good, but this trend line is way below both of them. So there's really no trend according to this. Yes?
Usually gold is opposite of like the SPY. Like when the SPY is down, gold is up, and gold is down, SPY is up. I've noticed that recently.
Well,
the SPY
yeah,
they're together. Is that how it works?
Well, it can be like that.
Okay, there's no.
Yes,
reason with
it's not an absolute, nothing's an absolute rule.
Right.
Gold is supposed to go down if the dollar goes up,
Okay.
but there actually have been periods where they both go up together or they both go down together.
Okay.
So, and you'll read all sorts of nonsense in the financial news about this. It's not true. Because in the 70s, the market did collapse, the stock market, and gold soared and soared and soared, and there was huge inflation. And you'll hear like, oh, interest rates are going up, gold should go down. Well, there was interest rates were 20% in the into the 70s, and gold was soaring to like all-time highs. So don't believe those. So this is not this is silver. Silver's been bearish. This chart's bearish. This is neutral. This is sort of neutral. It's around 0, and this is neutral. So silver's just hanging out there doing nothing. So if you want to buy precious metal, either gold or platinum or palladium. Now platinum looks okay. It's above that yellow line, and it went down to that yellow line. The colors are inverted, they're not correct. It went to a higher high the next week, which is positive. The 50 is neutral. This is positive. The blue lines over the red lines of buy signal as over 0, which is good. You need this black line to cross this for a buy signal. You'd like it to look a little more bullish. But notice this went to a higher high, gold went to a higher high, even silver went to a higher high, and silver's pretty bearish. And then this is palladium, and that went to a higher high. All precious metals. And this is very bullish pattern for palladium. So, but this is a sell signal right here. This went a tinge below 50, which is not, should raise your eyebrows. This is trying to turn negative too. And palladium's been bullish for a long, long time, so it may be done. So you may have to worry about that. Okay, bonds, interest rates are going up. These are interest rates. These are not bond prices. Bond prices and interest rates move in the exact opposite direction. If interest rates are going up, bond prices are going down. So there's an interest rate chart. You see the interest rates are going up. That means the bond prices are falling. And so you had the bond prices this is 30-year treasury. Bond prices were falling during this drop. Stock prices were falling during this drop. So there was no like safety. And so the bond prices went down, and then the next week, the yield went even a little higher, which means the bond prices went even further down. So this is relatively bullish for interest rates, which means it's bearish for bonds. And we see this in every country but one. Here is the 10-year treasury. We see a similar pattern, except this is a very strong buy signal. Here is the 10-year UK gilt. That's their equivalent of treasuries. Notice that these are interest rates, not the price of the bond. This went up and then went up further the next week. So that means bonds were really weak. And the interest rates are on buy signals, which means the interest rates are going up and the bonds are going down. And we see something similar in Germany, and except like the next week we did not hit a higher high, but the bonds were weak during the stock sell-off. And this is a very bullish looking chart for interest rates, which means it's very bearish for bond prices. Now the one exception, JGB is Japanese government bonds. These actually the interest rates went down that crash week and they went lower the next week. So Japan is the one exception in the world for higher interest rates. And Japan's a mess. So if you wanted to own bond, the one bond you made money in was the Japanese government bond. Not the US, not the UK, not Germany, nothing in the Eurozone. Now, this is our canary in the coal mine indicator, which has been riding along the top for quite some time. Now, this week, the sell-off, this really sold off badly. And you now have a situation where you have the blue line above the red line above the gold line. Now the gold line crossing this red line is a first sell signal. If that blue line crosses the red line, it's a long-term sell signal. And that means the market is going to go. This frequently is a coincident or leading indicator for the market going down. That was very coincident right here. Now it actually went down the week before, so it did give you some warning. Notice it could not get to a higher high, and it's selling below all those three indices. And this is below 50, which is bearish. This is below 0, which is bearish. And notice the sell signal happened right here, and that's in last November. Actually, last October, the sell signal took place. So there's a lot of warning this was going to fall apart, which in turn warned you the stock market was going to have a drop. And the sell signal here is in late October, right around November 1st. So this is a very bearish looking chart.
I have a question.
Yes.
Did you just said that the bond prices are going down, which means that there might be a less demand for the bond price, so people want to allocate their money more in stock, which is kind of bullish for stocks?
No, both can be sold at the same time.
So, like in 2008, when the mortgage crisis happened, we have seen the treasury yields going down because people started allocating money in the bonds, and that's when prices soared.
No, treasuries went up.
The yield goes down.
No, the price of the bond went up, but the interest rate went
The
down.
interest rates goes down.
Yes, don't confuse it. This is not interest rates. This is actually the price of the bond.
So, yeah.
All the other charts were interest rates.
So my question is, so if the prices are going up, it means more people are investing money in bonds, right?
Right, yeah, sure.
So it means they are taking away their money out of some other investment haven, which could be stocks.
Well, they could or could not be.
Could not. Okay.
They,
But-
you can keep money in cash.
Yeah, but in 2008, the reverse
Where
happened.
people money moved into bonds,
From
treasuries, and the dollar.
Okay. So right now.
And it moved out of gold, which should not have happened. Money can go into gold and commodities also.
Okay. Okay. So right
There's other
now-
places money can go. And like people always say, oh, the last thing, it's always like this. Well, that's not true. I mean, if it was like that then, it doesn't have to be like that the next drop. I just mentioned the 1970s,
Mhm.
where like interest rates were 20%, but gold and commodities were soaring and incredible to all-time new highs. Now, if you listen to the financial TV today, oh, that can't happen. Well, it happened all throughout the entire
Yeah.
70s. Yes, it can happen, and that was what was going on in the 70s. That can happen again. So it's not like there's only, and money does not have to go into U.S. Treasury. It can go into Japanese bonds.
Okay.
This big money is global. It does not have to stay in the United States. It can go into Swiss francs. It could go buy, it could buy any number of other bonds elsewhere. And from the looks of this, treasuries were not doing well,
Okay.
and so, which is unusual. This is unusual. That's why you have to know, like, oh, something strange is happening. Now, this is merely a warning of what's going on, and it's a bad warning. It's saying bad things are happening. And you have to watch this. If this suddenly recovers and goes back above that blue line, and then things have suddenly gotten better. But this whole chart is negative, all of it. So it's going to take a lot of money to reverse this trend. So these are base metals. As I said, it's copper, tin, nickel, lead, zinc. Things you make things with. And this is really a bullish chart, and it was hardly damaged at all in the sell-off, and the next week it was back to being totally bullish. So there was a slight selling here, and then another, it's reverted, so there's some weakness right at this point. This is a buy signal, however, that's still totally intact. So it's been amazing, and this is an indication of how strong the global manufacturing economy is. So it's saying it's still in good shape. And that usually means China, which is odd, because China was in a disastrous shape. Copper, you see, like, the same thing we saw with the dollar euro. Copper has been going up, but you see this diminishing of strength in the RSI, which indicates there's some selling coming in the future, just like would happen with the euro, and the opposite with the dollar, like it would go up. So this weakness has shown up right here in this sell signal, although it sort of ended here and then it came back. And this is like this weakness right here. So this is sort of like some warnings are showing up in copper, and copper controls the base metals. It's the leading leader of the group. So this is eyebrow raising and a warning. Coffee has been a disaster forever. David had some chart. I mean, this JO used to be 80 at one point. It's now 15. So there's a lot of coffee in the world. There's too much. So there's just like, you need to drink more coffee. I drink as much as I can. So, what happened? So a cotton is weak, but it's not, as long as it's above that yellow line, it's in good shape. And this blue line needs to be above this red line. It isn't, so the chart's not quite perfect. And then this is a buy signal though, but it looks like it's trying to end. This is a buy signal. So cotton still has some strength. Now, a number of commodities, like agricultural commodities, no matter how bad the economy is, people can still buy cotton clothes, or cotton things. They're very cheap. Same thing with like sugar. I think sugar is next. I mean, you have to be really poor not to be able to buy sugar, and that's not likely to happen. So, but sugar has been very weak, but that has to do with there's too much sugar being grown. And sugar can be like turned on and off really quickly. There can be a big shortage one year, and the next year there can be excess, because sugar can be grown all over the world. It's not just sugar cane, it's also sugar beets, which can be grown in cold countries. So sugar is like incredibly volatile. Right now it's very weak, and that has nothing to do with the rest of the stock market or global economy. People can buy sugar no matter what. So that's it. Any questions? Okay, this man over here has a question.
So both the short-term and the long-term interest rate are going up. And interest rate
Except
is,
in Japan.
right, in the US. So interest rate is
Oh, Europe also. Europe
okay.
too.
So interest rate is the expectation of future inflation, right? Higher interest rate is is a response to the expectation
It
of higher
should be,
inflation.
yeah, it should be.
So as the Fed is